When you study the rise and fall of great powers long enough, you begin to notice something unsettling. Superpowers don't collapse randomly, and they don't collapse overnight. They follow a recognizable pattern, a sequence of stages that repeats across centuries, regardless of culture, political system, or ideology. Historians and economists sometimes call it the superpower decline cycle. And once you see it, you can't unsee it. Take the Spanish Empire in the 16th and 17th centuries. At one point, Spain controlled half of the world's gold and silver. It was the richest nation on earth, militarily unmatched and seemingly unstoppable. Yet within a single lifetime, it went from the center of global power to a bankrupt state struggling to maintain relevance. Then look at the British Empire in the early 20th century. It ruled over a quarter of the planet, its currency anchored global trade, and London was the financial capital of the world. But after two devastating world wars and a crushing burden of debt, Britain watched its empire unravel piece by piece. And finally, the Soviet Union, a nuclear superpower with vast territory, massive military forces, and global influence. On paper, it looked immovable, but its internal economic weaknesses were so severe that once the system cracked, the entire superpower dissolved in just a few years. Despite being separated by centuries, these three powers followed the same chain of events: military overextension, financial strain, currency distortion, declining productivity, social fragmentation, and ultimately the loss of global influence. Different eras, different governments, same pattern. And this pattern is measurable. You can track it in the numbers: rising deficits, falling output, swelling military commitments, declining trust in institutions. These markers appear long before collapse becomes visible. Which brings us to the uncomfortable question: what about the United States? Because today, America shows early signs that match the initial stages of that historical cycle. Global military commitments at massive cost, soaring national debt, a widening gap between consumption and domestic production, and social fractures that are becoming harder to ignore. So the question we must ask is simple and unavoidable. Is the United States merely experiencing a temporary slowdown, or is it beginning to follow the same decline pattern that ended every superpower before it? When we analyze how superpowers decline, one principle appears again and again. The fall almost never begins on the battlefield. It begins inside the economy. Long before a nation loses a war or a strategic position, it begins losing control of its financial foundations. And that internal erosion slowly shapes everything that comes afterward. History shows that when a country reaches the peak of its influence, something predictable happens. It starts to believe its rise is permanent. Growth feels inevitable. Military reach expands. Diplomatic commitments multiply. And leaders assume the nation's economic engine will always be strong enough to support every new obligation. But this is where the decline quietly begins. Expansion continues even as the country's productive capacity stops keeping pace. Instead of relying on real output, manufacturing, innovation, trade, the government increasingly turns to financial tools to sustain its global responsibilities. Borrowing rises, budgets swell, and debt becomes the bridge between ambition and reality. The early warning signs are subtle. Asset prices surge. Debt grows faster than GDP. The public feels prosperous even though the fundamentals are weakening. In nearly every historical case, society continues to insist that things are stable, because on the surface, they still look that way. Meanwhile, resources begin shifting away from productive sectors. Talent, capital, and political attention concentrate on sustaining military posture, foreign alliances, and internal bureaucratic expansion. Less energy flows into the industries that create tangible economic strength. And as this imbalance grows, governments delay reform. Why change anything when the system still appears to function? Why cut spending when borrowing is cheap? Why rethink strategy when the nation still carries the title of superpower? But eventually, the accumulated imbalance reaches a breaking point. Economists refer to this moment as the acceleration phase, when multiple pressures converge: rising debt costs, slowing output, political gridlock, and external competitors gaining momentum. Decline no longer moves gradually, it speeds up. Every major empire we've studied, Spain, Britain, the Soviet Union, entered this acceleration after losing control of their spending and overestimating their economic resilience. And this brings us to the reflection that concerns many observers of the United States today. America's global commitments are vast. Federal spending is locked in at levels difficult to reverse. Debt is rising faster than productivity. Asset markets appear strong even as underlying imbalances grow. These patterns don't mean collapse is certain, but they do mean the U.S. is displaying the same early dynamics that marked the beginning of decline in past superpowers. Which sets the stage for Part 3, where we look directly at how the first 5 stages of this historical pattern played out in Spain, Britain, and the Soviet Union, and how those stages compare to America's current trajectory. To understand where the United States may stand today, we first have to look backward. The purpose of this part is simple: to show that the first 5 stages of the decline cycle have already appeared, clearly and repeatedly, in the world's past empires. 3 of them illustrate this pattern almost perfectly. Let's begin with Spain. In the 16th and 17th centuries, Spain expanded its military footprint across Europe, the Mediterranean, and the Americas. Its commitments multiplied faster than its ability to fund them. Even with vast inflows of silver and gold from the New World, the empire overspent itself into vulnerability. Their currency was debased through the mixing of base metals, inflation soared, and the government defaulted on its debts multiple times. Spain looked powerful from the outside, but financially, it was coming apart. Britain followed a similar trajectory centuries later. 2 world wars drained its economic strength, hollowed out its industrial base, and forced the government to borrow heavily. When Britain attempted to return to the gold standard at its pre-war rate, it overvalued the pound and crippled its export competitiveness. Within a decade, the country was forced to abandon the gold standard entirely. The world's most influential currency had lost its anchor, and Britain's imperial finances collapsed soon after. Then came the Soviet Union, a superpower built on massive military spending but stagnant economic fundamentals. Its centrally planned economy could not innovate fast enough to support the scale of its geopolitical ambitions. Industrial inefficiency, technological lag, and chronic shortages weakened the system from within. When oil revenues fell in the 1980s, the Soviet model unraveled, leading to financial crisis, social strain, and ultimately, dissolution. Despite their differences, these 3 empires shared the same underlying weaknesses: uncontrolled debt or spending, declining productive strength, bloated administrative systems, and rising social tensions. And in every case, collapse wasn't triggered by a single shock. It was the cumulative result of decades of strategic miscalculations, mistakes leaders believed they had plenty of time to correct. And this is where reflection on the United States becomes unavoidable. Today, America displays several early signals that mirror Spain, Britain, and the Soviet Union during the middle to late stages of their cycles. Rising debt, stretched global commitments, political gridlock, and concerns about economic competitiveness. If the historical model holds,
we should see the same warning signs emerging in America's data, which is exactly what Part 4 will examine. How the numbers today line up with the first 5 stages of decline seen in past superpowers.
To understand where the United States stands in the historical cycle, we now turn to the data. The goal of this section is straightforward: to compare today's American indicators with the first 5 stages of decline seen previously in Spain, Britain, and the Soviet Union. And when we lay the numbers side by side, the parallels become difficult to ignore. Let's start with military expansion. The United States maintains the largest global military footprint in human history. Hundreds of bases, alliances spanning every major region, and security commitments that stretch across Europe, the Middle East, and the Pacific. This doesn't imply imminent failure, but scale matters. Every base, every deployment, every alliance requires long-term financing and long-term political stability. Historically, superpowers that sustained such global networks eventually struggled to fund them. This leads us to defense spending. America's military budget is the highest in the world by a wide margin and takes up a significant share of federal expenditures. While the U.S. economy is large enough to support it for now, the historical pattern shows that rising military costs combined with rising debt eventually strain even the strongest empires. Next is the monetary structure. In 1971, when the U.S. left the gold standard, the dollar became a fully fiat currency. Since then, the money supply has expanded dramatically, especially after 2000, and even more sharply after 2020. This is not a value judgment. It's simply a reflection of how modern financial systems operate. But in historical cases, rapid monetary expansion has often coincided with later stages of fiscal stress. Federal debt is the clearest indicator. America's national debt has grown for decades, and interest payments are rising faster than almost any other category of spending. Projections show that interest costs could surpass defense spending and even key social programs in the coming years, a sign consistent with Stage 3 in our historical model, the debt spiral phase. Meanwhile, America's productive capacity faces pressure. Manufacturing as a share of GDP has declined, the trade deficit persists, and many critical goods, from pharmaceuticals to semiconductors, rely on foreign supply chains. This echoes the pattern that emerged in superpowers whose domestic production weakened even as consumption remained high. Social indicators add another layer. Declining trust in institutions, internal migration out of major economic hubs, concerns about crime in certain cities, and a demographic picture defined by falling birth rates and an aging workforce. These trends resemble Stage 5 in the model: social strain triggered by long-term economic imbalance. Taken together, the numbers do not predict collapse, but they do show that the United States currently fits many characteristics of the first 5 stages observed in past superpowers. And that brings us to Part 5, where we examine the final 2 stages, the ones that determine whether a nation stabilizes or accelerates towards systemic crisis. As we move into the final part of the historical model, the stakes become higher. After a superpower passes through the first 5 stages of decline, what happens next usually determines its long-term fate. Some nations experience a slow, decades-long erosion. Others collapse rapidly. And the difference often lies in the last 2 stages of the cycle. Stage 6 begins when a dominant power starts losing its position as the world's primary reserve currency. For any superpower, this currency role is more than symbolic. It's a pillar of global influence. It allows the nation to borrow cheaply, to fund large military commitments, and to shape international trade. When that foundation weakens, the consequences ripple through every part of the economy. The erosion typically comes from several factors working together: high national debt, concerns among foreign investors, the rise of competing currencies, and structural changes in global trade. Over time, other countries diversify their reserves, increase gold holdings, or conduct bilateral trade using alternative currencies. This shift doesn't happen overnight, but once it begins, it tends to accelerate. The theoretical consequences of a weakening reserve currency are well documented. Capital starts flowing out. Borrowing becomes more expensive. Imports, especially energy, raw materials, and advanced components, become costlier. This is known as imported inflation, and it can strain both households and industries. Stage 7 emerges when these financial stresses spill into the political system. Historically, this stage is marked by fiscal gridlock, internal conflict over spending priorities, and declining public trust. Governments face rising costs and shrinking flexibility. Budget imbalances widen. At the extreme, some nations lose the ability to meet obligations, triggering institutional crises and rapid shifts in political power. We've seen these patterns before. Spain unraveled slowly over many decades. Britain declined over roughly 20 years as its empire dissolved. The Soviet Union collapsed with shocking speed, a matter of years rather than generations. The timelines differ, but the mechanisms are remarkably similar. Where does this leave the United States? America is not in stage 6 or 7, but some of the early signals, international diversification of reserves, rising debt costs, and political tension around fiscal issues, are visible. These indicators don't predict any specific outcome. They simply mirror the early conditions that preceded turning points in past superpowers. And that leads to the final question we'll explore in Part 6. Can the United States use its scale, innovation, and economic resilience to avoid these last two stages? Or is it moving closer to them than most people realize? As we reach the final part of this analysis, it's important to return to the foundation of the entire series: history. History doesn't repeat itself perfectly, but it does echo. Its patterns, incentives, and pressures tend to reappear across different eras, different governments, and different empires. And understanding those patterns is the only way to see where a superpower might be headed. When we look at past cycles of decline, one lesson stands out. Escape is possible, but only for nations that recognize the danger early and respond decisively. So what determines whether a superpower can break free from the downward path? Economists and historians typically focus on 4 core criteria: the strength of domestic production, the depth of technological innovation, the flexibility of political institutions, and the ability to rein in debt before it becomes unmanageable. Fiscal reform is one of the most powerful levers. Reducing deficits, restructuring spending, and restoring long-term revenue strength have historically allowed countries to stabilize before hitting the final stages of decline. Innovations and technological breakthroughs can also shift the trajectory. When a nation leads in transformative industries, energy, biotechnology, computing, manufacturing automation, it can rebuild productive capacity faster than the cycle predicts. Which brings us to the central question. Can the United States act quickly enough to avoid reaching stage 6 or stage 7? America has advantages that past superpowers never possessed. Its economy is the largest and most dynamic in the world. Its technology sector leads global innovation. Its corporations operate across every major market. And the country continues to attract talent from around the globe, a structural strength that Spain, Britain, and the Soviet Union never enjoyed in their later years. These assets could slow or even reverse the decline cycle, but only if leveraged effectively. Because the risks remain significant: growing political polarization, rapid expansion of federal debt, powerful interest groups resisting reform, and inconsistent long-term policy direction. These are vulnerabilities that have historically accelerated the fall of other superpowers when left unaddressed. And that leads us to an essential truth: the future is not predetermined. Empires do not fall simply because the cycle demands it. They fall when they refuse to adapt. In the next episode, we will explore the pivotal questions that will shape America's trajectory: the durability of the US dollar, the resilience of strategic supply chains, the evolution of global technological competition, and the policies that could influence the nation's long-term stability. If history is a mirror, the choices America makes now will determine whether it breaks the cycle or completes it.